SoFi is a one-stop shop platform that gives people options to either safeguard their money or use their platform to invest in stocks or crypto. When all is said and done, aka the bank charter approval, it will only be a matter of time to get to the place where Lending Club is now. As we all wait for the big day, why don't we take a look at the big moves being taken by these fintechs? Will it be enough to disrupt the financial service industry, or are you better off keeping your money under your mattress? Welcome to Wealth Gambit. On this channel, we cover the latest stock trends and news. Whether it's a deep dive into the fundamentals of a stock or breaking news, we cover it all here on this channel. If you guys like that type of content, don't forget to like and subscribe to be notified as soon as we drop new videos. It shows that around 80% of you guys watching aren't subscribed, so if you want to see more content like this, don't forget to subscribe. Also, please note that we are not financial advisors, so always do your own due diligence. In this video, we'd like to give the spotlight to two fintech contenders disrupting the old ways of borrowing, saving, and investing: Lending Club and SoFi. Should you be investing in any of them? If so, which one's better? Lending Club is a fintech company that was founded in 2006 but was launched in 2007 as one of the first Facebook applications to offer peer-to-peer lending. It's like the middleman between investors and borrowers. It makes revenue from the borrowers that apply for unsecured personal loans or those that don't require any collateral for about 3 to 5 years. So if anyone wants to become an investor in Lending Club, they could scroll through whichever loans they want to fund, and that's how the loans are executed. You may wonder, how does a fintech like Lending Club make money? Just like any other financial institution that you know, asking for a loan isn't free. We think there's nothing free in this world, and that's how loan origination fees enter the scene. According to our sources, loan origination fees are quoted as a percentage of the total loan, and they are generally between 0.5% and 1% of a mortgage loan in the United States. In a nutshell, loan origination fees are what the borrowers pay to Lending Club for processing, underwriting, and funding their loans. And this is what makes Lending Club one of the best providers of personal loans, making about $12.3 billion in loans just in 2019. And in 2020, the company announced an agreement with Radius Bank, a move that made its way up the ladder in the financial technology industry, and for a good reason. Lending Club spent about $185 million for this deal with Radius Bank. It was eventually completed in February this year, but on top of that, this has given the company a sustainable revenue model, and it's going to make more opportunities as they offer personalized products for its 3 million clients. With Radius Bank, they could have deposits and actually finalize loans without the help of partner banks, reducing the cost of funds and gaining cost advantages when compared to other fintechs. This range of opportunities became possible when they sped up the approval of a bank charter, and this strategic move got them into a checkmate over the OCC instead of fintechs following the same old route of applying for a newly created bank. Lending Club acquired an existing one, just to avoid more paperwork. At the time of making this video, Lending Club Corporation's getting hotter with a $30 price per share and about a $3 billion market cap. And if you invest today, there's actually a possibility that it grows up to 10 times bigger in a decade, at least according to what some analysts say today. Things are now making sense as Lending Club's CEO, Scott Sanborn, said the second quarter report of this year was the most profitable quarter in the history of the company, highlighting the perks of being a licensed digital bank. The company now has about 3.5 million members, and when you take a look at their records for the first half of 2021, the marketplace revenue is up 92% year over year, gathering a net interest income of $64.4 million, and that's a 49% increase, making an improvement in their net loss from $126.5 million last year to just $37.7 million this year. Lending Club must have been on cloud 9 for the past months, feeling all this intense growth in their numbers. And the acquisition of Radius Bank is actually paying off now that the bank charter has been approved and it's making its way towards open banking with the application programming interface, or API. In simpler terms, this is a growing trend in the industry where banks allow other fintechs or other companies to access their market data. Sooner or later, SoFi can follow in its footsteps now that Commander Noto redirected SoFi towards the grant of a bank charter. If you watched our previous videos, we're sure that you know that we're very bullish on SoFi. Because of this, we've made an entire playlist on SoFi with over 30 videos, so be sure to check that out if you want to learn more. Moving on, let's dig deeper into social finance technologies, aka SoFi. Everyone can call themselves the best, but not every fintech gets to be in CNBC's Disruptor 50. Compared to Lending Club, SoFi is younger, and you know what the older people say: experience is the best teacher. SoFi was founded in 2011. It's 5 years younger than Lending Club, but even so, the stock has already already reached a $15 billion market cap, cruising around $18 per share at the time of recording this. I'm sure you'd want to hear more. SoFi, as we all know, went public just this year. Since then, the company has had to prove itself. SoFi hasn't gone all in yet. The bank charter is still processing, and one of their main revenues, which is student loans, is yet to come back fully due to the student loan moratorium. On top of all that, SoFi has recently priced and closed $1.1 billion in convertible senior notes, which was 40% higher than the stock price of $16 per share. Do you know what that means? We're not the only bulls in here, and if you're still not on the right side, you'll probably miss the chance to take home loads of cash from here. Just like Lending Club, SoFi has also acquired an existing bank called Golden Pacific Bancorp for $22.3 million just this year. But unlike Lending Club, the deal is still on the table, waiting to close hopefully by the end of the year. It serves the same purpose though. It will eliminate the third-party banks, boost their earnings, and reduce net loss in their operations. The last quarter earnings call revealed that user growth has been ridiculously accelerating year over year. Total members are now 113% up from 1.2 million to 2.6 million, though it has incurred a $165.3 million net loss just for the second quarter. Take note that their financial services have been really hot these days among all the other business segments they have, from 2.4 million last year. In a snap, it became 17 million now, and that accounts for only one source of their revenue. It won't be a surprise if this will still be in the spotlight once the third quarter earnings are released. We've all been waiting for SoFi Bank to happen, and once that comes true, it will give SoFi another range of opportunities to personalize their products, take deposits, and extend loans backed by members' deposits instead of the pricey offerings it has as a non-bank. SoFi claims to be a one-stop shop for your financial needs, whether you're a student or you need personal or home loan. The company's multi-product strategy with a leading technology platform, or Galileo Technologies, positioned them in a place that could totally disrupt the financial service industry. If you want to get a picture of the difference between SoFi and Lending Club's personal products, take a look at this. If you ask us which is better, we're definitely heading towards a company that offers the most growth and promising returns. SoFi has tons of accomplishments despite being a youngster in the industry, especially considering it just went public this year. Both SoFi and Lending Club are now growing in numbers, but the real question is, who will give us the most long-term growth? That wraps it up for today's video, guys. What do you think about Lending Club and SoFi? Which do you think will take home the crown for being the most promising fintech today? If you happen to find any value in this video, please leave a like and comment down below. It helps the channel out a lot. And don't forget to subscribe and hit the notification bell to be updated on our latest uploads. Until next time, peace.